What's really happening with Bitcoin right now, and why this moment is unlike anything we've seen before. Bitcoin isn't just going up again. It's not another hype cycle. What's happening right now is the beginning of a financial shift so big that most people still don't understand the scale of it. This is not about crypto Twitter. This is not about day traders. This is about institutions, governments, global liquidity, and the mathematical design of Bitcoin colliding at the same time. Let's break down what is really happening. The macro environment is fueling Bitcoin like gasoline on fire. We are living through one of the most chaotic financial moments in history. The U.S. national debt has crossed $34 trillion. Interest payments on that debt are now over $1 trillion per year. Inflation remains sticky across the globe. Central banks are stuck. Lower rates equals more inflation. Higher rates equals recession. There is no clean exit for the traditional system. In the middle of this chaos, investors are searching for one thing: a way to protect themselves from a system that keeps printing money faster than it can solve problems. And Bitcoin has exactly two things the global economy desperately lacks: scarcity, predictability. That alone is enough to attract capital. But this time, it's not just retail money. Institutional adoption. The door to trillions just opened. For the first time ever, Bitcoin has entered the same arena as stocks, bonds, and gold. Why? Because of the spot Bitcoin ETFs. This changed everything. Let's look at the numbers. BlackRock's Bitcoin ETF, IBIT, smashed $1 billion in assets in a few days. Today, Bitcoin ETFs collectively manage over $30 billion. Some analysts estimate that institutional inflows could reach $200 to $500 billion over the next few years. Bitcoin ETF inflows have outpaced gold ETF inflows at their peak. When a pension fund puts 1% of their portfolio into Bitcoin, that's not millions, that's tens of billions. Suggested graphic. Growth curve of Bitcoin ETF inflows versus gold ETF inflows. And remember, for every ETF share bought, real Bitcoin must be acquired and stored. That removes Bitcoin from circulation. Lower supply, higher demand. The formula writes itself. The halving. The supply shock no one can stop. Bitcoin just went through another halving. That means miners now create 50% fewer Bitcoins every day. Let's put this into perspective. Before the halving, approximately 900 BTC minted daily. After the halving, approximately 450 BTC minted daily. Institutions are buying 5,000 plus BTC per day through ETFs. Miners can only supply 9% of that demand. This isn't a bullish indicator. This is a mathematical pressure cooker. Bitcoin supply is collapsing. Demand is exploding. Price has only one direction to escape: up. Suggested graphic. Bitcoin issuance per day, chart shrinking over time. Miners are no longer selling, they're hoarding. For years, miners would sell a large portion of their Bitcoin to cover electricity and hardware costs. Not anymore. Data from on-chain analytics shows miner selling is at the lowest point in 14 years. Mining companies are publicly announcing they're holding instead of selling. Some mining pools are restructuring to become long-term BTC accumulation machines. Why? Because after the halving, prices must rise for them to stay profitable. Holding Bitcoin is safer than selling it. This removes even more supply from the market. Global regulation. Governments are attacking, but accidentally strengthening Bitcoin. Countries are divided into two groups. The ones trying to stop Bitcoin: US, EU, India, parts of Asia. The ones trying to adopt Bitcoin: El Salvador, Argentina, Hong Kong, UAE, Singapore. Ironically, the attacks have only done one thing: proved Bitcoin cannot be stopped. Every time a government tries to restrict Bitcoin, hash rate goes up, wallet creation goes up, institutional adoption goes up, price recovers even stronger. Bitcoin is anti-fragile. It grows through pressure. Suggested graphic. Hash rate versus years with regulatory events marked. The psychological shift. Bitcoin is no longer magic internet money. For more than a decade, Bitcoin was treated like a joke. Now, Bank of America calls it digital gold. Fidelity calls it a superior monetary asset. BlackRock calls it the future of finance. People who ignored Bitcoin at $500 now buy it at $50,000. Why? Because narratives change slower than price, but once they change permanently. Bitcoin is crossing the line from speculation to legitimacy. And once that happens, it doesn't go back. The final equation: Scarcity plus demand plus institutions plus halving equals explosion. When you put all the pieces together, the conclusion becomes impossible to ignore. Bitcoin supply is shrinking faster than ever. Institutional demand is the highest in history. Retail investors haven't even fully returned yet. Miners are hoarding. Governments are preparing digital currencies. Macro instability is accelerating. The halving has already reduced supply by 50%. We are watching the early stages of a global financial transformation. This cycle is not 2013. It's not 2017. It's not 2021. This is the first cycle where Bitcoin becomes a real asset class for the entire world. And the world is waking up fast. Bitcoin is not just rising in price. It's rising in relevance, in adoption, in necessity, in inevitability. Whether someone loves Bitcoin or hates Bitcoin doesn't matter. The financial system is changing, and Bitcoin is already part of the new foundation. And if history continues to rhyme, what we're seeing right now is just the beginning.